So what's actually happening in tier 2 and tier 3 towns, Feroz? The demand for wealth managers over there is increasing. What exactly are investors looking for? What are they investing in?
Hi, Kavita. Like you rightly pointed out, beyond 30 cities, which is how Amphi and SEBI want to categorize them, are seeing an uptake. Point one. The reason being, I think the physical assets have disappointed. Largely, real estate over the last 8-10 years has disappointed people enormously, and I think people are becoming more and more mathematical about it. Now they're measuring the IRRs of their real estate investments, or when you start measuring using the same scale like financial instruments are measured under, then you get to know that the property which you bought might have quadrupled in 2 decades, from 1 crore to 4 crores, but the IRR is sub 6-7%. There is a paradigm shift in terms of capital allocation from physical to financial assets. That's one. Second, I think technology has made the country smaller. A person living in Mumbai or Bangalore is almost at par with respect to ease of implementation, like in a person sitting in Agra, for example. So that's the second important reason. I think third is the investor education program, which has taken a decade of lot of effort from the regulator to the market participants to media houses like ET now. I think that's created immense awareness for mutual funds as a long-term investment tool.
Sure. I really want to understand what's the kind of investor mindset we are talking about, in terms of their risk appetite, their risk profile, the kind of schemes or the way they are investing in equity. But before that, just one thing that I observed, your frame really looks good today, especially the guitar that's there behind your frame. That's something new and that's adding a lot of color. So good to see you in a different setup. But then, yeah, coming back to the investor mindset, you think they have enough risk appetite and they understand the power of investing in equity, or maybe understanding the concept of equity, or you think it's just one euphoria that we've seen going on since the pandemic?
No, Kavita, I think it's not interest derived out of past performance. That's the key differential between huge interests which have happened in the past, like in 2007-8, for example, before the financial crisis. The interest was driven largely by the past performance. 2006, 2005, and 2007 did so well that everybody wanted to jump in. That was basically the herd mentality. And that happened a couple of more times, like in 2017. Also, the huge retail interest, which came from even tier 2 and tier 3 cities back then, was driven by past performance. But this time it is very, very clear. The interest has come as a collateral benefit of education and financial discipline is apparent with two key variables. I personally think last 1.5 years, barring the last two series of expiry of May and June, markets have been very subdued for a year and a half. In spite of that, SIP numbers, as you have always reported promptly, have had an uptake every single month, which I think is a clear evidence of people not buying past performance. The second evidence, very categorically specific, I would like to make, that people are far more educated now. People are buying small cap funds. If you look at the small cap as a category, has not performed for the last 1, 2, 3 years. In fact, for the last 5 years, small cap index has underperformed Nifty. And when I see retail money coming into small cap index, it's a huge positive, pleasant surprise for me. Otherwise, retailers were the last people to enter and the first to go out when the markets actually take a U-turn and go up.
Exactly. So are we also seeing the mindset shift in terms of holding on to an investment? Because you mentioned a small cap category, and usually an investor would invest in this category, even if they know how risky it is, the main intention is to have much more return and as much return as possible. So is that the kind of mindset? Are they getting into for a longer period of time?
Yes, Kavita, I think there has been a redefinition to this English word, long term. I remember about 5-7 years back, I was speaking to somebody, and if I remember right, I was in Coimbatore. And there's a person who said that I want to invest for the long term. And I said, can you please be more specific? He said 1.5 years. And that was the definition of a tier 2 or a tier 3 city, whatever Coimbatore was called back then. in the form of long term. Now, when people say long term in these cities, we are not present in several, but we are present in about 5, 6 smaller cities. When we speak to HNI clients, when they say long term, they mean those 5, 7 years. I think that English term has been redefined to something more logical to be categorized as long term. Of course, long term should be 10, 20 years, in fact, till eternity, till you need the money. But I think that's redefined as well. That English word numerically means a lot different than it used to 5 years back.
Sure. One last question quickly, and then we'll go to our viewer who's already on the phone line with us. Major investment coming from Gen Zs, millennials. How do we break this down?
I think millennials have done justice to the mutual fund flows, right? If you now go back to the B30, beyond 30 cities, that's why it's abbreviated as B30, is about 7.19 lakh crores of total mutual fund assets. I think if there was also a study which says millennials are doing a great job in terms of contributing to that, Gen Z are not contributing as much because they're younger lot, they little require maturity. So you're so right. Millennials are the largest contributors in tier 2 cities because the larger tickets might not be with the millennials, but ancestrally rich, which happens in metros like Mumbai and Delhi. Bangalore is still new money amongst youngsters. There's a lot more money because that's driven. The economy in Bangalore is driven by technology largely. So I think millennials are the largest contributors from the beyond 30 cities because generational money is still in real estate in smaller towns like Bhubaneswar, which I recently visited.
Right. All right. So that's the reason behind wealth managers being in demand in tier 2 cities.